Outside tech circles, Silicon Valley Bank was relatively unknown in the UK. Now its name is on the lips of almost everyone in business after its sudden collapse and the swift rescue of its depositors followed a weekend of high drama. A wave of fear swept global financial institutions on Friday night, moving into a weekend of crisis talks involving Chancellor Jeremy Hunt, Prime Minister Rishi Sunak and the Governor of the Bank of England, Andrew Bailey. The 40-year-old Californian bank, which specializes in funding tech startups and scale-ups, had expanded rapidly at the start of the pandemic amid a boom in global technology stocks. Its deposits as much as tripled over 3 years. Its expansion had been fueled by a surge in new tech firms and lightning-fast growth of existing ones. But tech businesses are often loss-making and, in their early years, burn cash at a much faster rate than in other industries. To keep pace with this, SVB had invested in lots of safe assets like government bonds and mortgage-backed securities. That policy made perfect sense in a low-interest rate environment, but when interest rates rose, the value of SVB's bond holdings plunged. Before long, it had a $1.8 billion hole in its balance sheet. The bank told shareholders it would sell billions in assets at a loss and would seek a $2.2 billion capital raise to keep its balance sheet in check. But rather than reassure the market, the move sparked widespread panic. The next day, regulators shut down the US bank in California, and before long, the Bank of England said a similar move would take place in the UK. Tech firms were shocked at the news. Hundreds of them wrote to Chancellor Jeremy Hunt, warning him that without a rescue takeover, they would go bust within days after being locked out of their bank accounts. Jeremy Hunt worked around the clock with Prime Minister Rishi Sunak and Bank of England Governor Andrew Bailey to find a buyer for the SVB's UK operations.
We want to find a way that minimises, or if we possibly can, avoids all losses to those incredibly promising countries.
In the end, HSBC snapped it up for £1 in a last-minute rescue deal announced before the markets opened on Monday, narrowly averting a major disaster in London's key tech sector and bringing a host of fast-growing, cutting-edge UK firms to the country's biggest bank as customers. Tech firms up and down the country breathed a collective sigh of relief.